The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Wildly mixed market trade on Monday. That is the story that I'm going with. We saw the oilseed soy complex under heavy pressure, wheat trading higher with increased fighting in the Black Sea region, corn caught in the middle, and then on the same token, cattle futures, they pushed their way lower late in the day. Hogs had a little bit of strength. So plenty to dissect. Joining us now, we welcome in our good friend John Heinberg with Total Farm Marketing here on today's program. And John, hope you had a good weekend. And as I was kind of saying, wildly volatile market, but I guess I shouldn't say terribly volatile because the markets themselves didn't move a whole lot after the open. We kind of found the range and we kind of stuck there, at least in the case of the grains and oilseeds, John.
Yeah, we did for the most part. I mean, obviously, let's get to that wheat market, and that's where, probably the strength is. Again, over the weekend, we saw some escalation between the Ukraine and Russia in terms of that Black Sea region. Again, we'll need to kind of keep an eye on how that, continues to go. If it does get to a point, maybe it thinks about affecting the Russian side of the export, that could be definitely friendly to the wheat market. I think the wheat market may be a little bit past anything on the Ukraine side right now. Mm-hmm. So we'll have to see what the extent of that wants to go to. But that brought a little premium into wheat today. That probably really helped the corn market out from what could have been a pretty tough day, especially given the way the soybean market acted after those rains came through the Midwest. So hit a lot of people over the weekend with good coverage right through the heart of the Corn Belt. Obviously, beans, with beans being made in August mentality reflected that today. And corn, just like I said, was stuck in the middle between the two. Unfortunately, we did put another lower day in. I'd say 8 out of 9, I believe, here, and a new lower low for the move, even though we did trade off those lows by a few pennies.
Well, and to your point there, we did get off the lows in corn, but still put on a 4 handle on December corn, even if it's 4.95 and 3/4, still not something that we necessarily want to see, although we have seen it before here recent months as we've had these rallies. We've seen 4 come back on the board there in D's corn, John.
Yeah, we have. And we got to see where this wants to go to. It still feels like the path of least resistance is down to that 480 low from back in the July report window. We'll have to see if the market wants to agree with that or not. But that just seems like where we're headed at this time frame. Just on the money flow side, I think we would have, like I said, a lot tougher day if wheat would have, been calmer. Mm-hmm. We saw when wheat was only up 10, corn was down 7. Then we got that little push back to 20 higher than the day, and it just lifted corn off those lows. Wheat winds up being either the anchor here or the, not so much maybe the balloon. Last night wheat's up 20 cents, corn picked up a penny or two in the overnight trade. So you can tell there's some connection there, at least in terms of just strength, but in terms of, that strong move from one to the other seems to be fading here just because of the weather and the forecast that we're seeing for the next few weeks.
Well, and I'm going to pull up on our video feed on the map from our friend Eric Snodgrass at Nutrien, just depicts some of that rainfall totals that we saw, really that wide stretch from the Dakotas down through parts of southwest southern Iowa, Missouri into Illinois. And something that Eric talked about as well, western Illinois really benefiting big time, picking up some beneficial rains there. And, John, we see a map like this and we think about the soybeans, as you mentioned, made in August is the typical theme. Do we worry that the soy complex has a little more downside potential to it here before we hit the end of the week and we have the August WASDE report in front of us?
We got to watch some technical barriers here. Today we fell, through a consolidation point. That's what probably triggered the most selling, closing under that 200-day. We consolidated right around that for 4 days straight. We kind of broke through that support line today. down to the 100-day, which is down there at that 1290 area. That seemed to hold us at least at this time frame. Then we got another moving average right over top. We ping pong between the two for pretty much the rest of the afternoon. My concerning point here, if we go through that 100-day moving average, then what are we looking at? Again, we're looking at that July low around the 1250 handle. In fact, if you go back and do a retracement from the June low to that high in July, about the 50 or 62% point is around that 1250 handle. So if we kind of break through, I would say that's where I'm targeting a downside area. And that's something maybe we want to move some put premium around, or maybe start thinking about some calls. There was a little buzz on social media here towards the afternoon. Some of these longer range forecasts are coming in. Now, typically for El Nino, not saying this is what's going to happen, but I'm going to just put the little bird out there, is Brazil is on the drier side in through those winter months for us, which is their spring. That might be something that, was a wild card we need to keep an eye on, because again, the world needs those Brazilian beans. They're going to plant a monster crop from everything that we're hearing, from the projections from analysts out there. All of a sudden, hey, do we have to keep some weather premium in? If you move some beans, probably think about some of those January calls. Keep them cheap. Just have something out there, because we know how volatile the bean market can be if that weather were to kind of come together.
And to your point on that, Eric did mention that as well today. He had talked with some Brazilian farmers last week on a tour and showed them one long-range weather model map that he had here even last week that kind of depicted some of that potential dryness. And he said they were out as soon as the translator caught up, and they were out and had their phones out, snapping pictures, sending it to folks back in Brazil. So to your point, some of that worry is definitely out there in the trade, and I think that's a great point to keep in mind. I want to ask as well, John, coming up Friday, August WASDE report. It is the first USDA NASS-produced yield estimates, and it's not the September one will be based largely on farmer surveys. This one's more of the NASS numbers. I mean, what are you expecting going into that report? Do we think we'll see some consolidation ahead of it? Do we think we could see a wild card thrown at us? What's your thoughts and what's your feeling heading towards Friday?
I'm cautious on this one. Obviously, again, we got that combination producer survey and NASS and satellite information coming together, put this first one together. I think about when those surveys were done. They were done mid-July when things were improving. So the optimism of some of the producers might be a little higher. Again, we won't get boots on the ground numbers until the September report, and that's going to be the big key here. I'm watching this window again. I talk about that 480 low. If we get a good breakdown to that before the report, I'm probably going to shift some things to the upside just in case. I mean, I'm looking at a market here. You got a 591 insurance guarantee out there. That could be something that draws this market higher. At the same time, too, maybe we're oversold in here. I'm not thinking we're going to get anything bullish on the report. Okay, at this time frame, I'm trying to find it, unless there's just a major adjustment on the yield that we're not foreseeing. Most of the analysts are keeping things around that 75 to 77 window so far. Haven't seen the official projections yet in terms of what the analysts' expectations are in that regard. So unless something comes in, it's a 172 or something like that. I think this market's got this thing fairly priced in at this time frame, but maybe we just get ourselves a positive reaction and just get some money flow because of the oversoldness of the market. Plus then, we'll start getting some boots on the ground. Now we'll start getting some ideas. You got Pro Farmer Tour coming up on the 21st. You got other group tours going out there, starting to get some numbers. You'll hear more and more from what producers are seeing themselves. Obviously, social media will be flying with the pictures of tip back corn and things of that nature. But again, make sure you just keep everything within a grain of salt in terms of what could really be there. The biggest thing that's still a concern right now is the demand side of the equation. Weekly export inspections today were lackluster, kind of in pace with what the USDA is expecting, maybe a little bit behind. Do we see an adjustment on the old crop supply with 3 weeks to go? And then we just aren't selling it. Yeah, it was nice to see Mexico step up, pick up some corn today. But they're about the only ones that's ahead of the game in terms of corn buying right now on the export front. So those are things that concern me that, hey, the USDA goes ahead, makes 2 or 3 bushels per acre type of cut, and they could flip this over on the other side and balance it out and still keep a carryover over that 2.2 billion.
And I'm glad you brought up demand. I was going to ask you on that, but that's a sticking point for me. I worry that we could see some unforeseen changes to the demand side of the equation on Friday with USDA's numbers. But Something to keep in mind as well, John. Here, I know for producers, a lot of tools in the toolbox in front of them, and if they're worried about protecting some risk going through Friday's report, there's all sorts of different short-dated options. There's different tools. There's a lot of things that they can do to protect their downside right now, John.
Yeah, the key right now is balance. Where are you at? I mean, obviously you've got upside potential in this market. That's your bushels in the field that are unsold. The biggest thing you want to make sure is we don't have a washout. If something comes in, with the improved weather, watch this, all of a sudden the yield coming at 178, or it goes up again. And then you would see this market really be on the negative side. If we go through the 460 level, that's kind of my secondary support. If we break 480, that opens us up for a pretty big drop in terms of where this market can get to. And I think producers need to be a realist about what's happening out there. I know there's quite a few people got their, feet stuck in the ground here saying, nope, we expect this, the prices need to be higher. Look at all this hot weather. Right now the process the USDA goes through may not give us that for a while just because of how they figure these reports out. And sometimes you got to understand the process and more than just where you think the results are. So, 2.2 billion bushels of carryover, that's sub 450 corn, especially with the demand concerns. My fear longer term on this is we get to September and October, we kind of get this yield maybe dialed in a little bit. And this market turns around and says, hey, where's the demand? And they just drive prices down until we can find some and get some movement. I know one sale of corn to Mexico does not mean we're all here all of a sudden. It's just one sale. And that makes me a little concerned maybe post-harvest. We got these bushels and they're in storage or wherever, and this market says, hey, we need to sell it and we're going to push prices down so we get some sold.
We're having a conversation today with John Heinberg from Total Farm Marketing. John, let's look at livestock. And, we kind of accelerated the gains in hogs and the losses in cattle to a certain degree late in Monday's session. I have to think that was just a general kind of trend of the day. Hogs added some premium, cattle took away some premium, just kind of going the same direction that we really started Monday's session. John, what do you think?
Yeah, a little concern on the cattle move today. I mean, live cattle looks like a little bit more of a back and fill type day. Let's go back, test support. We had a solid little uptrend building here again. We got cash trade a little bit higher last week. You can see the carcass values maybe kick in a little bit. We're down to about 301 on choice carcasses. We thought maybe we had a little bottom in that last week, and that seemed to kind of fade. I think that's going to be a key part to this. But at least we're seeing a good bit on cash, and the numbers still are friendly for cattle. But again, we got a market with a big reversal sitting out there from a couple weeks ago that looks a bit like a toppy type trade. But with that being said, you go look at the weekly charts. We actually bullish reversed that turned this thing higher on the week. Sometimes those are stronger because of the longer term trends that might still be here. So cattle market may hold in, stay choppy. Wait and see what happens on the retail side and see if that gets things moving. Feeders obviously disappointed today, but you had that strong day in wheat, flat day in corn. Might have been a good day to see some profit taking in that feeder market. Again, we just got to keep an eye on things in terms of how that chart looks right now. They're very questionable in terms of their pattern. Look a little bit tired. Could we see some more corrective action? We'll have to kind of keep an eye on and see things here. So this might be one where live cattle prices drive feeders for a while, or if we do get a hard break back in the grains. Lastly, hogs, nice day in the retail side today, good day in the cash market side today. I've been talking about that October. I think I mentioned it last week, looked a little bit undervalued, especially when you got a cash index trading up there in that 104, 105 window. August coming off the books here in a couple of weeks. October's got to tighten that gap up. I don't see that cash index rolling over that quickly. So we got a little bit of premium to that October contract as well as those deferred contracts today, just given that front month strength on those retail values in the cash trade.
On as well, one other thought, just this cash cattle market. I've been very perplexed with what has been going on there, and it feels like we need more activity and we're not getting it. And I don't get the feeling in the sense that we're going to get more activity here this week. I guess we'll wait and see, but that cash side of the trade in cattle has been very perplexing to me as of late.
Yeah, some of it's the packers trying to keep the chains a little bit tighter, just that way they can maybe keep those retail supplies a little tighter, get that value up there so they can try to make some margins. We saw some earnings calls today from Tyson Foods, and they didn't have a real good quarter, at least in terms of the pork side of it and the chicken side of it. So now right now packers are running a little bit in the red in terms of the cattle side. So that's some of it. Don't forget they're still trying to run a business too, even though they kind of hold the cards at times. So we'll have to see. the numbers are still there in terms of for the producer, and they were bidding early last week, but just didn't put the money out there. And a lot of producers just said, hey, we got room, let these cattle sit, and we'll sit. So biggest thing we got to watch is what happens with the weights and things of that nature. If we start backing up cattle, get some heavier weights, that's not going to be the best in terms of keeping things on the kill floor moving here. But again, Packers at this time frame kind of feel like they can hold things back a little bit here, given the value, and try to get these prices to lift a little higher so they can match some of these cash bids, even though the supplies are still tight.
John, any thoughts on that dairy market before we let you go today? I know that has been volatile here as of late. What's the latest you're seeing as we kick off the week?
Again, another market that feels like it's had a good recovery. Feels like it's a bit toppy right now. We've had a couple reversals off this most recent rally. Back up challenging that today. So keep an eye on what happens with cheese trade. It's one of those things where production's still fairly good. The cooler temperatures forecasted across the country will help out there. Some adequate moisture in some regions only helps out that as well right now too. A little bit cautious, but we're in that heavier demand window for cheese. Here comes football season. Here comes schools coming back in session. We're starting to see a little bit more retail demand. We've seen a nice run in that cheese market. Now, how does that have legs beyond this point? We'll see. But again, maybe we got some value that producers need to be on their guard here and make sure we take care of things when you got this type of value put back into this market.
John, great thoughts as always. Anything final you want to share or reiterate before we let you go today?
Yeah, outside markets are interesting, strong moving the stock market here today. Crude oil kind of topping out a little bit. But, there seems to be a little bit of general optimism. We'll see if that can carry over into these grain markets. Biggest thing is, don't put the hope as a strategy mentality in here. Stay balanced in terms of what we're doing, especially in the grains. There is more room for downside here. I'd rather watch put premium go worthless and watch your bushels go up than the other way around.
John, if folks want to reach out and get some advice from you there at Total Farm Marketing, what is the best way to reach you?
Love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com and that website of ours, totalfarmmarketing.com.
John, always great to catch up with you. Have an awesome week, and we'll talk to you next week.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing. That's going to do it for today's episode of Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.